With that, the Trump trades dissipating very quickly. But what's in store for the emerging markets? We spoke to Sonal Varma, Managing Director and Chief Economist at Nomura, has an answer to that. Listen in.
Well, it's a extremely tough period because if the US does go ahead and implement the various tariffs that it's promising to on 2nd of April, which is something as a house we think is likely to get implemented, then from an economic perspective for the US, we are likely to see weakness in growth. We think it's going to be a year of below trend growth and higher inflation as the tariffs kick in. So that stagflationary kind of a backdrop actually ties the Fed's hands in terms of what they can do. And as you all were discussing, the US administration is also ready to take some short-term pain for what they believe is going to be a medium-term benefit for the US economy. For EMs in that backdrop is essentially, much weaker growth. We think disinflation is likely to still happen because higher tariffs on China does mean the risk of more dumping of those excess products in other countries. But then we also need to basically be ready for more volatility in terms of financial markets, in terms of more capital outflows, currency spillovers, which typically do have feedback loop back into consumers through the wealth effect and businesses because of uncertainty. So essentially, weak growth and more volatility is what it all means.